So let's take a look at some markets. Let's apply our core strategy. I often come with, let's see, resend that if you sent me an email and I did, because I'm pretty caught up on emails, so I might have either missed it or it didn't make it, but yeah, I would resend that. Um, so typically I come with quite a few levels and opportunities prepared. I thought today I would make sure, and I've got my whole list of markets here, so I want to make sure that we go over the markets that you want to go over. If you have any, if not, that's okay too. Oh, the email bounced. Okay, yeah, just resend it. Here, let me type my email address in here. Okay, there it is. All right, let's take a look at the Aussie and the pound and all that. Let's do that. Yeah, I always tend to drift over to the futures, but let's try to stick to as much FX as we can. So let's do that here. All right, if you look at the Aussie dollar in the, actually, I'm just going to break a rule. It's going to break my own rule. Let me just show you the Aussie futures real quick, just because I've got a lot of levels and looks like some targets were hit. Let me get rid of those blue lines. So if you look at the Aussie weekly down here, and we'll go back to the spot in a minute, just want to make sure you're aware of where it's at in the big picture. Okay, right here. Take a look. We're back up to this weekly supply. Now, for kind of an X-ray snapshot of that, and we've gone over all these Aussie levels here in the FX Street. We have, we have these two levels above. The upper one, keep in mind, is very fresh and looks really good. If you notice where price is at right now, we're at a supply zone, and then we've got another supply zone sitting just above it. So as far as the futures go, we've got some overhead supply. Now, when you look at the demand side, there's not a whole lot below current price, right? See that? And I'll kind of point that out in a second here. Let me just get this level in. Okay, here we go. Okay, so that level looks really good. I know it's been touched once, but that's okay. Price just barely touched the level and collapsed. All right, let's keep going. So a profit zone here. If you look at the downside, any demand, you really don't have any demand until down here. Plenty of room. We're looking at a daily chart. I don't even want to spend too much time on this one because again, it's a daily chart. You're not going to get too much on. Let's go over the levels and let's move on. So sitting just above some pretty good supply there. And now let's go back over to the spot. All right, and as you can see, the chart looks the same. I can put these levels in for you, but let me see on this 4-hour if we can get some areas in here. You know what? Let's go right down to the 5-minute here. Okay, let's take. So you could see we bounced right at demand. I don't know if anybody was able to get this down there, but here's our fresh demand zone below current price. Here is our new fresh supply zone above current price. And let me just put that in. We'll get these levels right in just a second. So there's a good chance this Aussie can play out even during our session, which would be nice. Okay, there's our demand zone. Okay, and actually this line looks pretty good there. You're going to have, there is a small level above this. It's going to be sitting right here. So, oh, I'm actually going to bring this down. I'm glad we went down to the 2-minute. This entry point needs to come way down to here. And I would want to get in a little bit before that. So if you haven't noticed, your best levels, and I'm curious, what you folks think, but what you're going to find is your best levels, your biggest challenge with them is not going to be necessarily losing money. There's always risk of that, but that's typically not going to happen with your best levels. The challenge with your best levels is getting filled. So that's why at levels like this, I choose to get in a few ticks before the level. All right. Anyway, there's our supply above. Here's our demand below. So we'd look to be short sellers right up here. You're going to have some trouble with this level right here, but if price get up in here, we'd look to be a short seller up here with a stop. I would go just above that price action right there. Let's get this in. So we want to be just above this. Probably not going to need that big of a stop, but that should ideally be right there. Entry, stop. These prices are, there's that, 740. Okay, so not bad. And then again, this would be our initial target down here. So decent sized profit room to the downside. Remember, we already went over the larger time frame. So there you go. Any questions on that one? And that's also how we set up a trade from start to finish. The other chart I want to take a look at, I'm not sure if anybody, I don't see anybody asking for it yet. Is this one? This is the dollar. We're looking at an hourly chart, a 60-minute chart of the dollar. And we have two supply zones on top of each other. Okay, and then obviously another big one up here. So, the dollar's had a really tough time getting through this one. Let me back this out to a 4-hour chart though, and I'm going to show you. Now we've looked at this. What I'm going to show you now, we've looked at a number of times, but just to make sure you have it. So there are the levels we have in the much larger time frames. Okay. But again, these are way, way out there. So I don't think there's, obviously we're not going to get close to that now. But now if we come back down to the, 60-minute, 30-minute, you can see why the dollar is struggling right here. So the dollar is struggling at this congestion right here. It hasn't even gotten into these two areas sitting right up here. Okay. So it looks like the sweet spot for a turning point in the dollar is likely to come up in this range. Okay, still a really, really small range. It's 96.60 up to 96.90. Getting to where it is right now, but if the dollar is struggling where it's at right now, it should have a much tougher time as it gets up into here. And remember, there's a lot of buying going on. Obviously, there's an equal, as far as trades being filled, there's an equal amount. There's always, buyer seller. But all the all the buying that's taking place to keep price to where it's at now, it's a lot. So in theory, you get to 96.60, you're going to reach these next set of supply zones with fewer buyers left, suggesting a more likely scenario that prices drop in the dollar. Okay. And the dollar drops, that can very easily push the euro up to that supply zone, which is kind of what we want, right? Okay. If the dollar gets up, if the Aussie dollar does get up to this supply zone, we want it to turn lower. And you see in the dollar, there are a couple small time frame demand zones below. So the scenario is set up. Now we just need prices to move. Let me get this chart back, and then we'll keep moving forward. Okay, we'll leave the Aussie dollar alone. Sure, let's look at crude oil, and then we'll come back and look at the pound. I think that's the other market that a couple people wanted to look at. Okay, here's crude. So what we have here, I know this chart very well. We've got some supply at 42.90, and I'll put that in here in a second. We probably want to look at this chart right here. I've looked at this chart so much already this morning, it's not even funny. So I'm just going to combine these two levels on top of each other. And then, of course, we have a couple great levels sitting on top of that. What we're looking at here is, actually I had 42.85 up to 43.40. Okay. If you think of all the markets we've gone over all year so far, and we're a little more than halfway through the year, supply zones and shorting crude in crude oil and shorting crude oil has been, it's our favorite market of the year, right? It's just been unbelievable. Don't see that scenario. The chart is suggesting that scenario doesn't change. We still have very quality supply zones above and a lack of demand below. You can see here on the chart of the dollar, our demand zone, or at least our fresh demand zone, is not till 35.05 or what is it? Yeah, or 34.85. And our supply zone is sitting just above here again. That's the 42.85 to 43.40. Now you have a couple really high quality zones above that. Those two zones would achieve a very high odds enhancer score. So we're stacked up with supply zones above, and demand is quite a bit lower. Okay. All right, let's move on. All right, let's keep going. Let's see the next market. Oh yeah, we're going to look at the pound. Sorry about that. I was kind of looking through the list here. There we go. Okay, sorry about that. Let's look at the pound. Let's start with the weekly. I see your question there on the odds enhancers, the levels. Yeah, you can email me on that. Every situation is a little bit different. There was we do have our standard, courses and our standard path. And again, for me, just in my position, the only thing that matters to me is that Online Trading Academy students are successful. If they're happy, that's great, but it's far secondary to are they successful. So that's the focus, and that's how we design all the education paths and all the tools and services. So having said that, I was with a gentleman 2 days ago now at one of our centers, and he really he trades FX. That's why I'm thinking of it because we're in an FX session here. He's, great guy, drives a taxi and seems to make, decent money doing it, enough to, provide for his family. We had a long conversation, and enough to provide for his family, and but really not much on top of that. Provide a nice home and provide for his family and all that. But he doesn't have, he doesn't have the funds to jump into multiple asset classes and all this other stuff. But he trades FX, and what he really wanted was, man, if I could just get my hands on those levels, that would, I'm doing okay, but I'm sure I'd do a lot better. So we helped him. We figured it out for him. Okay. Anyway, so shoot me an email. Everybody's situation is different, and there you go. All right, the pound. Who would have thought this would be the most interesting market of the year? I want to see why we have that level in there. And my guess is I'm not going to be able to see, but all right. Well, let's go down to the smaller time frames. And I thought, so what we were waiting for last time is a demand zone going to develop here? Hadn't happened yet, but is it going to develop in the larger time frames? That did not happen. So that scenario did not play out. I'm not saying we were expecting it, but it didn't play out. That's okay. But when we look at the 60-minute, here's the level that I would feel comfortable taking a chance at. And I'm going to give you the very conservative way of setting this one up. Okay. Now, what is this level down here? We keep putting in levels and stuff, but what does this level really tell us here? It tells us, what, the pound has been down, it's been beaten up. We all know the news, but for whatever reason, and I don't think the reason matters at all. At this price point, which is right here, 129.90-ish, there is a lot of demand for the pound. Right? Less than a month ago at that price point. A lot of demand. So much demand that prices could not stay there, and the competition to buy there was so fierce that price took off and didn't look back and shot all the way up to here. Does everybody understand that? More importantly, does anybody not agree with that? Does anybody think it different? Because you need to get to a point where you understand that this is just all about supply and demand. Like what I just said, it's kind of like we're talking about gravity. Price was here, now it's not, because demand exceeds supply. I think we all agree with that, right? So having, fresh demand, again, it's a little more than this, but just generally, see how this demand zone has been developed, and I'm answering the question in the chat. Since this level was created, price has not been back to this level even once. Okay, even once. So we call that a fresh level. The only other thing we need to consider before taking this trade is there a significant profit zone on the upside with this level? And looking at the 60-minute chart, the answer is Yes, right? In this decline right here, we don't see any supply. All the way up to here, this is not supply. There's nothing on this chart that we see that represents fresh supply, and that's what we're looking for. Okay. We can go down to a really small time frame, and yeah, you're going to see 2 and 5 minute supply zones above, and and so on. But that doesn't matter. Not a big deal. Does that make sense? So I'm not saying you have to take this trade. I'm saying I'm comfortable taking this trade. So you can see the levels here, right down to about 129. Call it 45. So I'd want to stop a little less than 10 ticks below that. You're probably fine with and the only thing that's not ideal about this is we've got this wick over here that goes all the way down to here. So if it's possible to put our stop below that, like right in here, that would be the safe way to do it. Okay, I'll make this a red line. And then we have a nice big target above. Okay. All right. And again, typically, yeah, and so I changed, I just saw the wick, so that's why I changed my talk track on the stop. I see this wick right over here, so in your best levels, you don't have that, but that's why I put the stop just below that. You can also look to enter. There's a more conservative entry right here. That's the actual origin of the move, and that's 129.85. So keeps it a little bit smaller. The other thing to look at to really understand this, look at inside the level. Right, we've got this wick here, then a higher low, a higher low, a higher low, and it takes off. Again, just keep it really, really simple. Why is that happening? Because there's so much demand there. There's so much, and don't forget what demand is. It's competition to buy. Okay. I would say if you want a conservative target, 133 at least to start. Okay, gold, yeah, we can look at gold. I've looked at gold, and I think this is the market where there really wasn't a whole lot to do. But I could be wrong. Let's look. Let's actually go to the continuous contract, GC. I assume you're talking about the futures when you say gold. Yeah, in the big picture, there's not a whole lot to set up at this moment. There's some supply above, but we need much more of a rally that we're going to get, in the next day or so. But on the small time frames, I think that this is really. Oh yeah. Here, let me go back to the 5-minute chart. Yeah, this is it. It's fallen a lot though. So we have these two supply zones above. Earlier, I was looking at this one. This one's still in play. All this has happened in the last couple hours, so don't think things can't turn and gold can't rally. All right. Yeah, if prices get up into that level, and this level looks very strong, this level would score out extremely high with our odds enhancers. There is a really nice profit zone. Make the chart bigger so you can see it. There, there it is. So down to the 40. So I'd say a nice profit target of 1343. Okay. That's a good 3-to-1. Yeah, 1368, sure. Great area up there, but you're going to hit this and turn lower. You're likely to do that first. So that's why I didn't put the upper one in. It's not that there's anything wrong with it. It's just you're going to hit the lower one first. Okay. Let's see, what else do we have here? Yeah, I could pull up. Let's see. That was Adobe. What time frame are you looking at? You're probably looking at the bigger time frames. Well, let's see. 94.57 to 66. Or where's your? Got it. Okay, let's just pull this chart up here. Yeah, with Adobe, you're looking at this rally-based drop supply. And that's not the level you were talking about, but that looks like a pretty good level. And yeah, price could certainly get up there. Yeah, below current price. The only thing is, I see your demand zone down here, but you are going to run into a little something at 96. So with that one, I would also tie that to the broad market or whatever the Nasdaq is going to do. That's probably what Adobe's going to do. So I would just, with that supply level and your demand level below, if you can time those with the Nasdaq, the broad market, you're probably good. Okay. Sure, let's keep going here. Euro yen. I see there's a request for that. So let's pull it up. Okay, let's start with the larger time frame. Oh, really good level above and below. This is the weekly though, so I'm not going to draw the levels in because we're not going to get there today. But here above, right at 120, right around 123, and then really nice level below at 107. Keep an eye out there. So when we come down to some smaller time frames here, let's do that. Let's actually go to the smaller. There we go. So if you had to just, again, quickly define your fresh supply and fresh demand, both above and below current price, coming out of this drop base rally demand, you have a zone right there. That's probably where price is headed. and then your supply above is going to be right up here. So either one of those is probably where, let's see, those are both going to be magnets for price and turning points. Okay. Price is right in the now, down to a minute, so I wouldn't doing too much in between there is not low risk. Remember, as price close to equilibrium and out to our supply and demand zones, your odds of being correct in a turn and movement of a turn and movement price increase. Okay, that's euro yen. I also saw that there were a couple of requests for the Canadian dollar. Let's look at that. So there's the Canadian. This huge move today. Frame, yes, we have some really nice supply above. Just supply zones stacked on top of each other. We also have some demand below, but the key here is it's farther down than the supply is above, and there's only one level before. Then you have a pretty big drop before you get to anything else that's solid. So that scenario suggests that while the Canadian dollar can certainly rally a little bit more, it suggests that in the next, in the coming week or weeks, the Canadian's likely to be lower. Make sense? That's the daily. But I want all that information going into, when we go to look at a smaller time frame chart. Okay. So where's that likely to start? Like, where do we want to really get interested? Right up in here, just above 135. So big picture, we want to get interested in shorting the. There likely to be a lot of room below, and that's where you start getting into that pretty thick supply zone area, those areas. But look at this time frame too. Around a 60-minute, you really don't have anything that represents demand below. Okay. All right. Let me see what other markets we want to look at here. Oh, one thing though, if you're a really short-term trader, given everything we just said about the Canadian dollar, oops, I was going to give you a, here's a possible buying opportunity, 131.48 with a stop at 33. You're risking a few ticks to maybe make 15, 20. If that's what you're looking for. But you find that all the time in some of the natural gas. Yep, natural gas has a couple nice opportunities I was planning out this morning, and here's one of them. Well, first of all, before we make sure you understand what's sitting below current price in natural gas. And again, it's been years since I thought I'd even say anything. And because there's room to get there on the time frames, here's the 4 hour just above this supply. Okay, there's that. Let me put the chart back. Yeah. If we go to the 60-minute, I was looking at this earlier. If I remember correctly, this is where we can spot the nice opportunities. Yeah, we've been to this level once. Now we're gone through it. We really need price to get a little bit higher. Let me go to the 30. There's a really nice level above right here. This level can very easily be in play next, but I wouldn't think about shorting it before then, unless you've got a little 2-minute, 5-minute setup that you're looking at. Okay. Okay. There's that level up there at 31,332. So, but before that, what do we have? So there's let's just take some X-ray snapshots. And let's go down. Okay. Yeah, so if this continues to fall, you have a couple levels down here. If you're a really short-term trader in the yen, and that's fine. I did that for years. Traded the yen as a very active trader. So, but we would need prices to fall. I'd say down to this 60. So we're not there yet. A little ways to go. All right. Well, I see our time's kind of up, and I don't see any more requests in here. So we've gone over a lot of markets. That last one I went over, the natural gas. Watch that one if you trade that market. And again, we have great levels in the FX markets. We just need price to move away from where it's at now and get out there. Patience is really one of the big keys to trading. I know it's not no fun, but it's required. So hopefully that was helpful and you learned a little bit. And you have my email address. You can scroll up. I put it in here a couple times. If you have any questions, or you're having any challenges reaching your trading or financial goals, you can always shoot me an email. There's help. And we'll see you next time. All right. Have a great weekend, everybody. And we'll see you then.